Well, thank you so much for joining us today and welcome you into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kirshner, and Chaz Price. My name is Chris Swan. Here's how you reach out, 419-794-3030. Once again, 419-794-3030. Online, arhq.com. On today's show, we've got a heads up on a major tax event that could impact your retirement. Can you safely withdraw emergency cash from an annuity? And inflation is even hitting the tooth fairy. All this and more. But first, let me check in with the guys. Nolan Baker, not with us today, but Scott Kirshner, Chaz Price. Glad to be with you guys as always. How are we doing today?
Well, we're doing very, very well. Nolan is actually down in Florida at a little conference they got going on down there. Chaz, you and I had the pleasure of going last year, but this year we get to stay back home here and man the office. And weather is kind of up and down here in Northwest Ohio, and anybody, obviously you listeners out there that are in Northwest Ohio, we have two options. We can either suck it up and deal with it or move, right?
Yeah, I'm boycotting jackets right now, so I think that has something to do with maybe bringing on some warmer weather.
Absolutely.
You can certainly hope for it. You can plan for it, but, there are some things that are beyond our control, and it actually leads into this first story here. The Fed meeting in a couple days, and once again is expected to increase interest rates, but Fox Business host Charles Payne says the hikes, well, they're cutting into Main Street.
Costco told us this week things are bad. Walmart told us this week things are bad. They're telling us that the average person is in trouble right now. My greatest plea is to the Federal Reserve, please take a step back. I think this underscores the fact that we need to take a pause with the Federal Reserve.
But, it probably won't, and we can't control it, much like the weather, But what is the next step now when it comes to preserving our retirement savings?
Well, I think Charles Payne's got it spot on there. The one thing that's really good with the interest rates going up is, your money market accounts. I talk all the time about the HSA, the health savings accounts for people. So anybody out there that's investing in health savings accounts, if you have that qualified high deductible health plan, the higher interest rates is helping you out a lot. Your money markets, you pull your money over to the sideline with the market going up and down, and you can get some pretty good buys on the money market accounts. But Chaz, what is there anything else that's good with these interest rates going up? Or because we've talked before, I know with Nolan and you talking before, they said usually it takes a little time for these higher interest rates to catch up and really see the effect of them. What's your thoughts on that?
Yeah, I agree with that. I think it does take a little bit of time for the Fed's movements and interest rates to actually filter through the economy. What's interesting, though, and I think Charles does have some good points there, but higher interest rates don't seem to have really affected investors too much recently, as evidence of the fact that the stock market is doing really pretty well thus far this year. I mean, I think more recently, in the last 3 out of the 4 weeks, I think I read the market's been up. So we're not exactly sure why that is. I mean, when you look on paper, there's a lot of negativity out there in the markets. But I think from what I've been hearing, we're still kind of on a different trajectory of spending, the U.S. consumer, and it does still have a lot to do with COVID. I mean, I think it may have changed people's spending habits in general, and so that doesn't seem to be slowing down. The economy still seems to be strong. Earnings are coming in strong. So, but generally, I do think when interest rates change, anything fundamental in the economy like that, it is a good time to start to reevaluate some things in your financial situation. So one of them is review your asset allocation. Okay. The asset allocation is really just a fancy word for how much do you have in fixed interest or fixed income investments, and how much do you have in stocks. That also includes real estate investments as well. So most times, I think our clients and our listeners probably appreciate more of a balanced approach versus trying to get in and get out of the market, timing it, and trying to take advantage or complete advantage of interest rate movements one way or the other. One of the other investment ideas that's come to the forefront of our investment committee meetings recently has been these buffered strategies. So people are most familiar with the traditional stock and bond investments, but not a lot of people know about or maybe don't own a lot of alternative investments. And particularly, we're talking about buffered investments or financial products that offer investors a measure of protection. Now, obviously, when you have some protection built into the investments, you also lose some the gain and the potential growth. But buffered investments and alternative investments have been really pretty attractive in this sideways market of, a lot of competing economic indicators saying one thing. It's been a really rough arm wrestling match between bears and bulls right now. We call this a sideways market.
Chaz, what do you think about buying, the old country music songs, buy dirt, right?
Mm-hmm.
You hear there's a couple of songs out there about buying dirt. Quite frankly, what we mean by that is real estate or buying some property and holding on to that. I've talked with a couple of my clients that actually have talked about that and mentioned that we're actually we're taking an opportunity right now where during COVID we were able to put some money aside here because we weren't really doing anything. They've got some cash to spend and they want to spend that, and they're buying real estate, they're buying property.
Yeah.
Whether they build on it or not, they're just buying it at this point. It's kind of like gold, right?
Yeah, it's a good idea. I think it makes sense, again, as part of a diversified portfolio, especially for somebody like you, Scott, that's handy, that you don't mind doing a lot of the work yourself, because with real estate, the way I understand it, the more that you can do yourself as far as in
Sure.
improvements and whatnot, that contributes to your bottom line. But I think, yeah, absolutely, they're not making any more of it. And so real estate is kind of it's one of those, I wouldn't say guaranteed, but it's a reliable source of income. Mm-hmm. And so, yeah, it is definitely on the short list of investments that we look for, maybe not in form of actual real estate, owning the actual property, but you can invest in investments that kind of mimic the real estate market and provide you a really nice income, investments known as real estate investment trusts, some commodities. But yeah, it is part of that balanced portfolio, that balanced diet of investments that the yin and the yang, if you will.
Sure.
The ups and the downs. Does have a measure of some protection in the form of reliable income. But you got to know what you're doing too, because real estate is not riskless.
Sure.
It does have a significant amount of risk associated with it as well.
There are definitely alternatives out there to having your money in the market, which seems to be the tried and true. So many people out there expect that. But looking at these other alternatives, especially as you get closer and closer to retirement, and you want to mitigate the risk that you may see with market volatility becoming more and more present these days. Having the conversation, figuring out what can work best for you, all starts with a phone call to the team at America's Retirement Headquarters. 419-794-3030 is the phone number. That's again 419-794-3030. Or if you prefer, you can go online, arhq.com.